All right, so welcome everyone to the edition of The Conversation. And today we have a special guest with us. He is Tarun Kehair. Tarun, have I pronounced your last name properly?
Absolutely
Okay,
correct.
wonderful.
Absolutely correct.
Excellent. So Tarun happens to be somebody who loves the field of finance and he talks a lot about finance. And we'll talk about finance today with Tarun, where he'll talk to us and take us through the world of finance and help us demystify a lot of things around wealth management and wealth creation. But before that, let's get to know the person more. So Tarun, if you would help our viewers understand a bit more about your background and what you exactly do.
Yes, thank you very much, Ram. I think it was a humbling introduction. I would just like to tell the viewers about myself. So I'm Tarun Kehair. I'm a chartered accountant and company secretary both. I have about 22 years of experience as of today. I started my career way back in 99, 2000 after I had cleared my CA and CS examinations. And thereafter, I've had the opportunity of working with a number of MNCs and the privilege of working with renowned ones. Like I have worked with Tata Steel, I have worked with TNT, which is now acquired by FedEx. I have worked with Capgemini, which is an IT services major. I worked with WNS Global Services, which is a BPO. I've also worked with Jardine Lloyd and Thompson, which is now Marsh and McLennan, acquired by them. And thereafter, I was with a German firm. And practically, I have risen through the ranks in my corporate career, starting from assistant manager right up to the level of CFO. And I remember our meeting actually in 2016. And I want to thank you for that because that was a turning point in my career where I was actually getting, uh, you know, I would say bored of doing the same thing day in and day out, working in fine back because once you spend about 17, 18 years in the industry, it's like it runs in your blood. So the level of thrill starts coming down,
Yeah.
adhering to the marginal level of level of utility. And and by then I had already gathered private teaching experience. I used to teach the CA and CFA students, and that's when they said that you should take to teaching. So from 2000, I would say 16, I think 15, 16, I have been teaching full time. I'm not a core faculty with any of the colleges. I visit them as an expert or a visiting faculty as they call it. And I have had the privilege of being associated with the premier B schools. I started off with Maharashtra, and now I think I am associated with a number of schools across India, including the IIMs. So, and in terms of what I teach, I specialize in investment analysis, portfolio management, derivatives, risk management, wealth management, uh, mergers, acquisitions. These are like my core subjects where uh, I think I can add value,
Mhm.
and that's where I am today.
Excellent. I must say, that's a wealth of experience that you've garnered over the past couple of decades. And it's quite thrilling to listen to that. So welcome to the conversation, Tarun. Thank you so much for being here. So let me begin by asking the layman's question when it comes to money. I mean, we all love money, right? We all love to be wealthy. We all love money. But I must also admit that not many people know how to become wealthy. So I would want to ask you, what is your definition of wealth? And how do you look at money management in general?
I think wealth is something which can be accumulated over time. It requires patience, discipline, and I would say a lot of intellectual ability as well. Uh, Discipline is the most important. I think I owe this to my father. My father has been a living example for us because he taught me in fact, he still does. I must say that every penny that you save is equivalent to a penny that you earn. And therefore, it's important that, saving he's actually a guiding light in terms of the saving principle. The more you save, the better it is for you. And I remember reading one of those books by Warren Buffett and some other authors in this space, and they mentioned that I think the mistake that maximum, most of us do is we first spend, and then whatever is left, we save. It should just be the other way around, actually. So you should have a saving target which should commensurately grow with your income levels. And you should first save, and the balance that is left with you is what you should spend. Although I must admit I am quite a spendthrift myself, but I have tried to adhere to this principle, and it actually adds uh, it adds a lot of value in the context of wealth management. Of course, discipline, as I mentioned, and some amount of intellectual ability. So if you read if you read financial newspapers like Economic Times, Business Standard, get a lot of insights because there's so many experts to talk about varied subjects, and that also adds a lot of value that to you, and you realize the importance of money, and it's lesser when you begin, and it starts to grow on you as you rise up the ranks, and in your age you try to understand the importance of wealth management uh, more so, I think, after 35, 40. But if you see the recent youth today, they are extremely money conscious. Not only are they ambitious, they are very money conscious. So I would say they are already quite aware of the power of saving.
True, true. Well said. Now, because you use the word discipline, normally when we use the word discipline, it sounds more like a punishment. A lot of people don't look up to discipline as something very nice in their life.
Yeah.
So when it comes to financial discipline, and I'll tell you why I'm talking about discipline, because I often get to meet people who would say that, what, I just recently bought an iPhone 14, or I'm thinking of buying a car, but, this is the loan rate of interest or something like that. So I find it very strange that a lot of people would still borrow money to kind of meet their, not basic requirements, but kind of luxuries and comforts. What's your take on that? I mean, how much can we actually spend, and how much are we allowed to take a leeway on these things?
Actually, if we just break up the entities into two portions, corporates and individuals. For corporates, I think borrowing to a certain extent is good because borrowing comes with an interest cost, and interest cost can actually reduce your tax burden. And therefore, the effective cost of borrowing is lower, which kind of magnifies the returns for the shareholders. And it also amplifies your ROE. So it's actually return on equity. So it's good for the shareholders because of this concept of financial leverage. A lot of people who are studying finance would probably know about. From an individual's perspective, also borrowing may not be a bad idea as long as you have set limits for yourself. For example, if you are let's take an example of a couple who's a working couple. One of them earns 50,000 a month, the other one earns a lakh of rupees a month. So we're looking at 1,50,000 of monthly income. It's a middle class family, and they want to buy, or let's say they want to buy something for the house, which is probably 2 lakh rupees. So they don't want to go for, they are thinking that they should do that or not. Nowadays, there's so many options that are available. If you're not wanting to block this 2 lakh rupees at once, you can probably convert it to an EMI through your credit card, or you can, although you will have to pay interest, but that's the cost that you'll have to pay for getting that convenience of spreading the spreading the cost over the next 12 or 18 months rather than spending it immediately. So that doesn't affect you that much, but then you will have to be prepared to pay interest, and it kind of evens out your cash flow as well. So I think that as long as you have the ability to pay, and as long as you have the willingness to pay, I don't think borrowing is such a bad idea.
Okay.
So we do have, and there are so many options available these days. I mean, for consumer durables, you have 0% loans, which is such an attractive advantage. So there are, for homes, even for homes, like nowadays you can either you can opt for a floating rate loan, and of course during when the interest rates rise, it kind of hurts you. But you can also take the benefit of the times where probably interest rates are sometimes reduced, and it gives you the added advantage of spreading out the cost in larger time frames, and therefore it kind of eases your cash flows, and at the same time helps you to you know meet other obligations therefore.
Sure, sure. So what I essentially understand from you is, well, borrowing can be a good thing as long as you understand your ability to pay and your willingness to pay, right?
Yes,
Good. Now,
absolutely.
having spoken about expenses and how do you go about managing that, let's talk a bit more about the ability to save money and then to channelize it into investments. So a lot of people, especially in the modern context, we live in a world where people want instant gratification. And typically,
Yes,
investment that you talk about would take a sizable number of years for it to really grow bigger and then start paying you whether dividends or any other form of returns on that. So how does one inculcate the habit of investing on a regular basis? What does one need to do for that?
I think there are just two factors. There are just two. I mean, there are not many, just two: discipline and patience.
Mm-hmm.
Again, there are just two factors. So you have to be disciplined enough to put, so for example, you can decide avenues like I will put aside 10,000 rupees a month. I will put aside 10,000 rupees a month into an SIP. For a mutual fund, you have a systematic investment plan. 10,000 rupees a month isn't that heavy. What if you're professionally qualified, and if you are having a if you even if you start with a moderate package, 10,000 a month will probably hurt you a little when you start, but 2 years down the line, it will be quite comfortable for you. You can't imagine the amount of wealth you will be able to create if you just put that 10,000 in a systematic investment plan and forget about it for the next 30, 40 years. Okay, now you have PPF, Public Provident Fund. Uh, Government gives you so many benefits, although it locks your money for a number of years, but it is tax free when it is maturing, and it's a very good retirement benefit that you can plan for. You have NPS, which is National Pension Scheme, which gives you an additional tax deduction of 50,000 rupees as well. And equity. Now, equity is something, the mistake the people make in equity markets is, as you rightly mentioned, it's the age of instant gratification. Now, life isn't really instant coffee. So if you look at the stock market today, if you look at Nifty, it is ranging in the range of, it is currently in the range of 19,800. Now, Nifty wasn't born at 19,800. Nifty was probably a couple of thousands, a decade or 2 decades, 3 decades back. But today it is 19,800. So, you will have uh, the peaks and the troughs in the market if you look at the short term secondary trends. But overall, if you look at a primary trend over like 15, 20 years, a long term horizon, that's what value investing or long term investing is all about. The money is bound to grow. I mean, if you look at 2011, 12, I think the index was around 11,000. 5 years later, it was about 16,000, 15,000 actually, 14, 15,000. And now it is 19,000, 20, it's about to reach 20,000. So imagine the people who have stayed invested in the markets.
Yeah.
I'll give you the example of someone very close relative of mine.
Mm-hmm.
She got 100 shares as a gift from her father, 100 shares of ITC Limited, and that was, I think, uh, 40 years ago.
Mm-hmm.
And she has not spent a single money buying any ITC share. She just kept it. And every year she used to get dividends. Some years she used to get bonus, sometimes dividend, bonus, dividend, bonus. And the money kept on multiplying. The share price kept on increasing. Today she has a wealth of 65 lakh rupees only from ITC shares, and she hasn't spent a single money on her from out of her pocket. Now that is the power of investing.
Yeah.
Imagine if if you invest a small amount and then just forget about it, continue with your daily life, skip one meal. We all like to go for fancy dinners and we spend, and that's right. We should, and when we all do that, there's no harm. But maybe once we could, maybe one meal we could just skip and put that 5,000 in a fancy restaurant would have costed 5,000-7,000 rupees. Put it in equity and forget about it. And you see the return that it's going to give you over for next 15 years. You will be amazed. So there are there are blue chip stocks which never let you down in the long term. And there are fixed deposits also. So there is a range of instruments actually. I'm not sure if I am answering your question directly, but there are so many avenues. So if you have, as I mentioned, there are just two parameters.
Yeah.
If you are disciplined enough to save and you have the patience to wait for a longer term, your money will grow. Remember, if I can use Hindi with your permission,
Sure.
उतार चढ़ाव उतार चढ़ाव market में आएंगे. There will be ups and downs, but this is all short term. In the long term, there is only one route, and that route is upwards.
Yeah.
If you realize that, that is the power of long-term value investing.
Absolutely. Patience and discipline are the key things that one needs to develop. And I think these are qualities which are time tested, right? You spoke about Warren Buffett, and there are many other wealth creators in the world. And I think you might have your own funda around the world of investing, but these things need to be demonstrated in how you live your life. Now, a lot of people tend to also suggest that, look, all of this is nice, right? I mean, we need to invest, we need to save, and all of that is great. But what if my source of income in itself is so restricted? So what is your advice to people at large? I mean, is it good that they work for someone in a job, or you would suggest that people need to go for doing something on their own? Or would they, and one of the other things that we get to hear in today's world is to have multiple sources of income as well. There is so much of confusion around it. I mean, it's great to build wealth, but you also need to enhance your income levels, right? The revenue streams. How do you look at this entire thing?
Yeah, I think we need to be open-minded and conscious about the whole affair. I think it's but natural that people would, the expenses are increasing. So I don't see a reason why people wouldn't want to or shouldn't be allowed to increase their levels of income. It's but natural and it's right, I would say. Ultimately, we have to run our households. We have to plan for the education of our children, their marriages, we have to plan for our old age, medical expenses of our parents. There's so much to plan for. So the more the better as far as money is concerned. So I would, answer your question in two parts. Even if you have, let's say, uh, people with lesser incomes, no matter what the income is, a percentage of that income can still be saved. Uh, a person who makes 5,000 rupees a month, he wants to save 20% of his income, that's 1,000 rupees a month. A person who makes 50,000 rupees a month, for him it's 10,000 a month of saving. A person who makes 5 lakhs rupees a month, for him it's 1 lakh rupees a month of saving. So the percentage is fixed. You can decide based on what is your capacity and of course what your expenses are, and then probably set a limit.
Yeah.
And then put that small amounts, and it will actually grow up to be a big number if you do it constantly. And of course, be cost conscious as well. Nowadays with social media and with credit cards being offered and attractive packaging and sales and all of that, it's very easy to get caught up in the consumption epidemic, as I call it, and we all like to shop, and we are all victims of the consumption epidemic in some manner or the other. So I think we need to be cost conscious. We need to have a budget. We all work for corporates. We know what budgets are, but sometimes we do not imbibe the discipline of budgets for our households. I mean, why not? We run our household. We have to manage our entity, so we should have budgets. So if you make your budget according to a plan, and if you stick to that plan, I don't see any reason why that wealth cannot grow.
Okay. And would you advocate for people to have maybe multiple levels of
Source.
income?
Yes.
Is that a
I was just
practical
about
and a feasible solution?
very easy. I mean, you should. I mean, you also asked a question whether a person should be working or you should be self-employed. That has happened with me, and you are one of the motivators for that to happen. I remember very clearly. So I used to work with corporates, and somehow I was like 16, 17 years. I didn't have that kind of a thrill. I'll be very honest. So I wanted to do something of my own, which people might call me a fool because I, I left a high paying, rewarding, remunerative, powerful job and became a teacher. And when I started, you will not believe that when I started teaching for the first 1 year, my first year of revenue after I quit my corporate job was not even 5% of what I was earning. Uh, Not even 5% of what I was earning in my corporate life. But that did not dissuade me. I tried innovating, and I tried, you know, putting my best foot forward, exploring my strengths. I did, much like you, I did whatever I set out to do. Did it passionately, and then it kind of built up. And thankfully, with God's grace, I'm doing pretty well for myself. And of course, the so in terms of sources of income, you can have varied sources of income. Stock market is the biggest source of income that anybody can add to his kitty. I've already explained how. So if you have the intellectual ability, you can also trade in complex products like derivatives. Maybe you can do some futures and options to add. You can, and there is gold. Gold is the safest haven. You can also invest in something like sovereign gold bonds, which give you a gold's equivalent. It's denominated in grams of gold. I mean, there's so many avenues. You can probably, and diversification is the key. So you can have multiple sources of income. In fact, I know of people who are in corporates. They work 5 days a week for their job, and 2 days a week they want to maybe do their passion. Like some of them become life coaches, some of them become teachers, some of them become piano instructors, some of them become yoga instructors. So it's, I think, a mix of hobby and intellectual capability. And also, of course, there is additional money as well. And there's no harm I see in that. I think we all are open. We're all mature professionals. So I think we realize that we should be open to that. I mean, each one has the right to grow.
Absolutely, absolutely. Now, just as a continuation of what you said, we have several sources and avenues of investing today. However, even when it comes to the knowledge, the education around investment, I think there is still a lot of intellectual bankruptcy that you see around.
Yes.
People are not very sure where should they invest their money. And what typically happens because of that is they become a clickbait, or they fall victim to a lot of fraud schemes. They look at people who merely are influencers as experts, and then people also burn their fingers badly. So what would you recommend for the layman, especially the youth? How can they become more investment educated?
In fact, I was at a B school today where I was teaching them about technical analysis, and I told them that the biggest mistake you can do is join a Telegram channel or join 2 or 3 Telegram channels and to rely on tips. That's the biggest mistake that you can do. There is only one answer to that: trust your own judgment. If you are well read, if you can study on your own, and I tell you, finance and mathematics, finance is basically more of common sense than anything else. Whenever you do not understand finance, apply it to yourself. You'll understand it. That's the mantra of finance. So, the biggest mistake people do is outsource this part of their life to somebody else. which I think if you internalize and if you think that you can probably do it yourself, I think that will be the turning point. And people need to realize that they are able to, they are quite capable to do that. Nowadays, you can watch, of course, uh, not any educational content, but the good ones are also available. You can subscribe to them. You can watch YouTube videos of specialists on that space who are credible, and it's not long before you can make out the credibility of any person. And just follow them, learn, read books, read journals, talk to people, listen to everybody, but use your own mind and intellect to take your decision and what is best for you. So I think then you are at, then you are kind of on a better path, both in terms of money as well as in terms of risk management and mitigation of the ancillary risks around the whole exercise.
Absolutely. I think that's really well said. That's a very powerful insight, that listen to everyone, learn from everyone, but use your own judgment at the end of the day. I think that's extremely important for any person to look forward to. Wonderful. Now, you spoke about enhancing knowledge through books and literature. I know, unfortunately, we live in a world where there are mixed reactions to reading. Not a lot of people love reading today, or they don't have the time to do it. They don't have the energy to do it. But nonetheless, any particular books you would like to advise for people to pick up so that they can enhance their subject knowledge in finance and investments?
Yeah, before finance, I think people need to work around themselves. So there is one book which I have read almost 1 dozen times. There is this book called Seven Habits of Highly Effective People by Stephen Covey. Now that book is kind of a game changer for life. So if you want to really change your life, even in the aspect of finance, pick up that book, read it, and try to live by those principles. And then you can start building your finance. You can read books of people like Warren Buffett. He has wonderful literature available. And thereafter, financial literacy nowadays is, even you have so many apps on your mobile phone. You have Swiggy, you have Uber, you have HDFC Bank, HDFC Securities, all of these. So why not have an ET? Should have an economics times also maybe on your mobile phone. And when you are traveling, maybe in a train or you're or on a public transport, you can just put on your earphones and or maybe if you want to listen to the news, or you can just open up your ET app and read some of the key news. Follow the ET market section, which basically tells you all about how the Indian markets are. Look at the economy pages, because remember Charles Dow, who was like the pioneer of uh, financial markets and exchange, these technical analysis. He mentioned that we should apply rational behavior, we should understand and apply economic behavior when we want to infer about stock price actions or market actions. There is a very close linkage between economy and how the markets behave. If you are able to understand how inflation works, what is RBI doing for India in terms of interest rates, what is the US debt crisis, how is it going to impact the markets, what happens when the Fed pauses the interest rates, what could be the likely impact on the markets, what about the corporate earnings, have they been good, how will they impact the market? There's so many factors. If you are continuously appraised, it will not happen overnight. It's not going to happen overnight. You need to consciously upskill yourself, read, understand, interpret, and soon you will be on that path where you will be able to take informed decisions, which will turn out to be pretty effective as well.
Absolutely. Absolutely. So just like you invest regularly, you need to also invest regularly in learning about investments.
Yes,
right?
absolutely.
That's I think of prime importance.
Yes.
To conclude, I would like to ask you one final recommendation or one final mantra that you would like people to remember whenever they invest or whenever they're thinking of building money and wealth for themselves. What would that be?
I think the again, this is one of the principles of Stephen Covey. He says that begin with the end in mind. So you should have the final goal or a list of goals with some sort of broad timelines. Automatically, you will start planning for those goals, which will be aligned to your current capacity financially. And you will start moving towards that goal. Because, if you do not have a goal, then you're actually moving in darkness. So for you to be moving in the right direction, set objectives for yourself, and let these be smart goals, as they say, specific, measurable, achievable, realistic, time bound. Then you start moving towards them, and you will soon realize how well they pan out for you.
Well, that is a very, very pertinent and a very pertinent suggestion at that is you always begin with the end in mind. Thank you so much, Tarun, for sharing your thoughts with us, also sharing your own personal experiences around managing money. And as you said, it's not as much as a complicated subject as normally people think about it. I think it requires what you rightly pointed out, two things in pertinent, and I'm going to take that back from our conversation today. One is the discipline to save and invest regularly, and the patience to let your money grow over a period of time, irrespective of whatever investment channels you are looking at. So thank you once
Absolutely
again.
agree.
Thank you once again for being here. And I appreciate your time today. I hope that has given people to look forward to their own money management principles. Feel free to add your own thoughts and mantras to what you heard here. But I think the biggest takeaway is listen to everyone, learn from everyone, but apply your own discretion, apply your own knowledge, your own judgment, and your own mind. So thank you once again, Tarun, and I look forward to getting you back on this forum sometime very, very soon. Appreciate the time again, and thank you once again for being here with our viewers today.
Thank you very much, Ram. It was a pleasure talking to you as always. And thank you for inviting me for this discussion. In fact, I'm always mesmerized by the way you things forward. And that's the biggest takeaway for anyone who's watching this video as well.
Well, I'm humbled by that. Thank you so much once again, Tarun, and bye-bye
Thank you
for
very
now.
much. Thank you.
Thanks.